All right, welcome everybody to the Equity Guru video interview. Today we're talking to Ken D'Entremont. I always wonder if I'm putting the right accent on that, Ken, but
that's perfect, Chris. For a guy from the West Coast, that's pretty darn good.
Well, for a guy from Australia on the West Coast, even at that, we'd probably go with Dentrement or something like that.
Yeah, don't worry, I've heard it all.
So Ken's from Medexus Pharmaceuticals, which is MDP is your ticker symbol. We've been talking about Medexus for a while now, and I think we're pretty proud with the trajectory it's taken. To recap, for those that are unaware, you've got a product going through the FDA approval pipeline. Two delays on that, which have had a pretty negative effect on the stock, a much over negative, I would say. You'd probably agree. But since then, you've just really focused on driving revenue with the other products that you have, of which there are many. Would you like to give just a quick recap to those that are unaware of the Medexus experience?
Sure. Yeah, we have 17 products in total on the market in both US and Canada. And that clinical infrastructure is completely built out to support all of those products. We've been on a really strong growth trajectory. 4 years ago, we were 10 million in revenue. We're now projecting over 100 million in revenue in this fiscal year, which ends March 31st. So been on this really nice growth trajectory. And then on top of that, we have a pipeline of products that are coming and will eventually, we believe, make it to market.
For a company with around a $35 million US market cap to be driving in close to 110 million projected annually and growing seems to me like it rhymes with schmarbitrage. You know what I'm saying?
Yeah, I think it's completely, our share price is completely disconnected from the reality of our business. Here, as you mentioned, we've got a 100 million plus revenue business that produces strong positive EBITDA and free cash flow now. But a lot of people got totally focused only on our pipeline, which is significant. Treosulfan can be a very significant drug in the US. So people got focused on that and forgot about the fact that, hey, there's a really strong underlying business here. And the message I always try to put out is, look at our business fundamentals. Look what we have done historically to build this business and where we're going with the base business. And then the pipeline is really a bonus on top of that. If this pipeline comes through, it will more than double our revenue. So the plan here is to continue to grow strongly, continue to acquire or license new products, leverage the infrastructure that we already have in place so our costs don't go up, and that produces really strong returns. So, I'm really pleased with where we are. The most recent quarter was really strong. So we expect that we will continue to deliver those types of results.
Tell me, with the market cap being where it is compared to the revenue that you're making, it would strike me that larger fish in the pond might be sort of tapping you on the shoulder and saying, hey, it's a pretty good acquisition target right there. Have you had any motions towards that?
Yeah, I mean, there's constant interest. I mean, clearly, with this type of growth, the type of product portfolio we have, there is interest. And I think interest grows as we get larger. Obviously, it becomes a number that can move the needle for bigger companies. So clearly, that has been happening in our industry. Probably saw Amgen purchase Horizon very recently for, I think it was $28 billion. Horizon is a company that had a business strategy very much like ours. Started with licensing and acquisitions and grew continuously up to, over $1 billion of revenue. And, eventually got taken out by big pharma.
Right. So tell me, the fact that you keep growing indicates that you're, I guess, streamlining sales of the existing products. But every time you add a new SKU to the portfolio, it doesn't mean that you've got to go and add salespeople and create things out of whole cloth. You're just utilizing what's already there, right?
Yeah, no, you're exactly right. So, the way I describe it is we're leveraging the infrastructure we have. So, we have an infrastructure that can get products registered, distribute them, sell them, market them, manage them. And so you add a product to that infrastructure that is targeting the same either institution or physician. You don't have to add a whole bunch of infrastructure or salespeople. You already have them. And so, a product with a 60 or 70% gross margin, obviously a lot of that drops to the bottom line every time you add a product. Gleolan was a perfect example. We added 12 to $16 million US of revenue and only added, 6 salespeople.
That's pretty incredible. So it's like adding a shelf of products at a supermarket. You're really just making better use of your real estate. Can people expect in the next 3 to 6 months any more announcements on more products being added to that list?
We're working hard at it. Believe me, I think, every year we've done something fairly transformative, and we do have a full focused effort on business development, whether it be licensing or M&A. And so, yes, absolutely. We do expect every year we're going to have new products or new businesses that we're going to add to the existing portfolio. So, yeah, absolutely. There will be things coming.
Stock-wise, as much as the company's been through it a little bit over the last few years, the last 4 months have been quite transformative. You've gone from a low of around 90 cents, you're over $2 right now. The economy hasn't been so great in general. A lot of companies are suffering, but you've been on an upward trajectory. How much of that do you think is just down to the fact that you were way oversold, and how much of it is down to you're getting your story out and finding new people who are interested?
Yeah, it's probably a combination of both. Clearly, people are discovering the story and recognizing, wow, a company with 100+ million in revenue, US dollars, is trading for, less than 60 in terms of market cap. And so, that is getting out there. Plus the fact that there has been consistent positive results, right? I think we're 4 or 5 quarters now of, positive EBITDA, strong revenue growth. So just the repetition of those good results, I think are making people more comfortable to say, okay, yeah, that is a good investment and a safe investment.
I always tell people that I think what's core about your business model is people don't stop needing medicine. It's not a one-off that someone goes and treats their ailment. Once you've got a client, once you've got a customer, you've got that customer for good or ill for life. It seems to me to be just a growth model that has really little risk. Unless the world suddenly gets really healthy, you guys are going to be making more and more money as you go.
Yeah, I think you're right. I mean, the type of products that we have are not readily interchangeable. There's not some competitive product there that the patient could quickly switch to. Right. These products are, often for rare disease or orphan drugs that, treat a specific type of patient. And so they're not easily changed, and they improve that patient's life and extend that patient's life in many instances. So, these are really important drugs to these patients. And therefore, the stickiness of the revenue is really good. That quarter after quarter, that revenue is there. We have a couple of products in our portfolio, like Rupall, for instance, which is for seasonal allergies. So that has, funny quarterly variations, but the annual projection is upward strongly. It showed over 30% growth. So, the core of our product portfolio is doing really well. And, certain products in our portfolio are growing strongly.
The world has had a little bit of a shortage on a lot of medical products over the last couple of months in various places. As somebody who's inside the industry, do you see that continuing, or is that sort of a one-off based on logistical issues?
Yeah, I mean, it's been COVID related, so it's, every industry's had issues with supply chain. This industry has had the same problem. So there are certain molecules, certain drugs that just, haven't been readily available. So there has been some shifting. Fortunately, in our situation, we've always had a strategy of holding significant safety stock. So we've always held, 3 to 6 months of inventory. Such that if we do have any kind of disruption in the supply channel, we can still supply the customer. And so it hasn't really affected us, but there have been issues in the industry, and some of them are well documented. A few of them we've been able to take advantage of.
Interesting. So let's touch on treosulfan. It would be understandable if the company wanted to not talk about it because there's been delays, obviously, and it's been something that you felt more than I think you probably should. But your most recent news release indicated that it's going to take a little bit more of a time horizon to get to where you want to be. Could you put that into a little context?
Yeah, happy to. And, I do think it is important to make sure investors are aware of what's happening with our pipeline. But it is very much that. It's a pipeline product that will produce future revenue. Unfortunately, it looks like it's going to be later than we had projected. And it's all related to the FDA making sure that they have sufficient information to approve the drug, or at least make a decision on the drug. And so that's a situation. The sponsor, which is Medac, our partner, is fully responsible for the file and is responsible to fund the work that would go into collecting this additional information. So there's no cost to Medexus other than the delay, which we're obviously frustrated with.
Sure.
But we still believe that eventually this is a really good drug. It extends life for certain leukemia patients. So we do believe that eventually we will get it to market. Unfortunately, it's going to be later than we think. But again, I point to a really strong underlying business that makes money.
Right.
And we're not just about Trio. I mean, we're about a portfolio of products. We're not going to live and die by one product. We're obviously looking to build a portfolio of products. So, it's unfortunate, but that's what happens in drug development.
Sure. Does this experience of treosulfan make the company less likely to acquire other licenses that would require FDA approval, or is it just one of those things that happens?
Yeah, no, not at all. I think this is probably the first instance in our history where we've had a significant delay with a product. This is the first time it's happened.
Okay.
And it's not a product that we're managing the regulatory file. So no, absolutely not. It doesn't dissuade us from seeking new opportunities because we still think there's a very strong market for products that treat rare disease or are orphan drugs. I mean, these are really important developments for a certain group of patients. So no, absolutely, we could keep looking for more. I mean, again, we're trying to build a portfolio of products. It's not all about one product.
Got it. And I guess the experience it just adds to your knowledge base of the process going forward.
Absolutely. We've learned a ton, going through this process with treosulfan. And so we can apply that to other opportunities. And we continue to look for more products that we can leverage our U.S. infrastructure around. Look, when we started this, we only had Rasuvo, if you remember. And that was only a few years ago. Now we got Rasuvo, Ixinity, Gleolan, triamcinolone hexacetonide, and hopefully at some point treosulfan. So, it's just a stepwise approach. You just keep layering one product on top of another. It's a very straightforward business model. This is exactly what Horizon did.
I got to give you credit for remembering all those product names. I'm always surprised that they don't just start calling them Phil. Like Cindy cures your cancer. But anyway, I guess people are starting to understand now a little bit of what Medexus is. Like even myself, when we started talking, I would occasionally refer to it as a biotech company. You've really sort of, I guess, over the last year and a half, shown your work from the first time that Trio got delayed and everyone just decided to exit. You've really sort of got the story out there that, one, it's not all about Trio. Two, you guys are good at actually getting products to market, getting them in front of the people who can apply them to patients. I would imagine that your day-to-day today is a lot different from what it was a year and a half ago.
Absolutely, it is, because we're not trying to build infrastructure and build teams. We're really just trying to build product portfolio at this stage. And it's a lot easier when you're a $100 million company than when you're a $10 million company. Obviously, a lot more opportunities come to you. So we're evaluating really good opportunities. Some of them will eventually make it to our portfolio. So, I'm very optimistic about, where we are in the development of this company. We want to get to $500 billion of revenue. That's when we really have the scale that gives us the proper valuation for a company in our space.
Does anything need to happen on your side, like any game-changing catalyst moments from here on in, or is it just a case of just delivering every day on the business model?
Yeah, no, there's no binary event in this business. I mean, it is just incremental gains. And so, each product gets us closer to that goal. And so, there's nothing in our portfolio say, wow, this is going to happen or it doesn't happen, and it's a game changer. That's not at all the case. It's a matter of finding the good opportunities for the territory that we're interested in, which is only US and Canada. We have no plans to go beyond this territory. And just keep building the portfolio. It's easily done. It takes time. It takes perseverance, but it can easily be done. There are good examples of that. Companies doing exactly the same thing. We ourselves have already done it in Canada, and now we're executing that in the US. So, we've done it before. We've got a great team of people who are capable of doing it and managing a much larger company.
In terms of risk, I'm guessing the company doesn't need to go and raise any money anytime soon unless you're going to go and buy something big. You're not bleeding cash. It seems to me to be just a good, steady builder from here on in.
Yeah, absolutely. We don't need to go raise capital. We've only ever done that when we were adding a new piece of business. We've announced last quarter that we were working on the convertible debenture. Hopefully we'll have something positive to say about that soon. So no, there's nothing out there that is, really concerning me. The biggest concern I have is finding new opportunities, finding those next treosulfans, the new drugs that are going to allow us to grow the portfolio.
And no tendency to go develop your own or build anything from scratch through the FDA approval process?
It's a great question. And if you look at other companies that have been down this path, eventually, yes, you do go and say, okay, I can't find enough opportunities that are big enough that I can just go out and license. And, a company like Horizon and Jazz, again, very similar business models. They licensed and acquired like we are doing now. Eventually, when they had sufficient cash flow where they could take a portion of that, apply it to a late phase 3 development, then they did that. So that's possible at some point in our future when we're big enough that we can afford to put some money towards R&D.
And lastly, is there a checklist that you look for potential licensing opportunities? You want a drug that hits this mark, does this and does this.
Yeah.
I guess the question is for anyone out there who's got some IP that might be interested.
Yeah, absolutely. I mean, we're interested in orphan drug rare disease, so places where we can make a difference. We're already participating in hematology, obviously stem cell transplant with treosulfan, glioblastoma. And so those therapeutic areas are of keen interest to us. We have infrastructure built out, people in the institutions who could represent other companies' drugs.
Excellent. Well, look, I'll close this the way I always close with you, and that is congrats on continuing to deliver and growing this thing to the place where it is. It's no easy task, and many before you have tried and many have died. So just to get where you are right now is a big feather in your cap, and keep on doing it, man. I guess, a lot of times companies say, well, we're not curing cancer here, but you're curing a lot of stuff.
We're helping a lot of people, which makes us all good. That's the reason we got into this in the first place. And thank you. We do feel like we're making progress, and we just want to keep doing it for our investors and the patients that depend on us.
It's great. Well, look, I know that when we talk to potential clients and they say, well, who do you do business with? You guys are one of the first companies out of our mouth. And happy on our side to represent what you're doing. Congrats.
Appreciate that, Chris. Nice catching up with you. Have a good one.
That was Ken D'Entremont from Medexus Pharmaceuticals, MDP.